On the eve of the budget, the economic survey projects sluggish growth next year, pegs FY26 GDP growth rate between 6.3 to 6.8%. Growth rate for the current financial year estimated at 6.4%, the slowest in 4 years. The economic survey warns India Inc. of wage growth moderation when corporate profits are at a 15-year high. Says it is in the enlightened self-interest of corporates to take job creation seriously. The survey also says the private sector needs to do more to boost consumption.
So deregulation is not just about ease of doing business, it is a pathway to employment generation.
The chief economic advisor makes a big pitch for deregulation, asks governments to get out of the way and allow businesses to focus on their core mission, says governments must stop micromanaging economic activity. The economic survey warns of a churn in the labour market due to the rise of artificial intelligence, as the problem is magnified for India given its size and relatively low per capita income. The budget session of Parliament kicks off with the President's address. The government has listed 16 bills besides the financial legislations related to the budget. Opposition sharpens the knives, calls for a debate on the economy and the Kumbh Mela tragedy, among other issues. Well, those are the headlines from Parliament as the budget session begins. Thanks very much for joining us on Business 360. I'm Shireen Bhatt. But the other big stories we're tracking for you this evening. Stock markets perk up ahead of the budget. The Sensex gains over 700 points. The Nifty reclaims 23,500. Both indices up 2% this week, snapping a 3-week losing streak.
My response to competitors is I think they celebrated too soon.
Yeah.
Right? Let them bring their response to our announcements today, and we'll see. Market mein milenge unse.
Competitors celebrated too soon. It's game on, says Ola Electric's Bhavish Agarwal. The company launches 4 new electric scooters with a starting price of 80,000 rupees. Apple's revenue rises 4% in the December quarter, but iPhone sales failed to meet expectations. Tim Cook says the company is particularly keen on India as sales hit a record high. Nestle India meets estimates in Q3. Volume growth at 3% beats estimates, making it the first major FMCG company to deliver higher growth in this quarter.
मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे।
भारत की विकास यात्रा के इस अमृतकाल को आज मेरी सरकार अभूतपूर्व उपलब्धियों के माध्यम से नई ऊर्जा दे रही है। तीसरे कार्यकाल में 3 गुना तेज गति से काम हो रहा है। आज देश बड़े निर्णयों और नीतियों को असाधारण गति से लागू होते देख रहा है।
False promise.
Boring. No comment.
No, the president was getting very tired by the end.
Repeating the same thing again
No,
and
she
again.
could hardly speak, poor thing.
It's the eve of the union budget. The government has tabled the economic survey projecting FY26 GDP growth at between 6.3 to 6.8% for the financial year. It has been estimated at 6.4%, the slowest in 4 years. With growth slowing down, the chief economic advisor sent out a clear message to corporate India. The baton on capital expenditure needs to pass on to the government, and India Inc. needs to do more. The CA points that corporate profits are at a 15-year high, but wage growth is moderating. The CA says, and I quote, "It is in the enlightened self-interest of corporates who are swimming in profits to take job creation seriously," end of quote. But not just corporate India. The economic survey also has a word of advice for the government, and that is get out of the way. Allow businesses to focus on their core mission. Deregulation clearly has been the big central theme of the economic survey. It says the government must stop micromanaging economic activity. And it's not just deregulation that the government has pitchforked as an idea. The survey also warns India Inc. not to ignore the impact of artificial intelligence. Over the next few minutes, our team of reporters will decode the key commentaries from the survey. But first, listen in to the chief economic advisor, who, without mincing words, said the private sector needs to do more to boost consumption.
The growth in profitability and the growth in employment expenses, which is a combination of hiring and compensation, there is a huge disparity between the two, which has been highlighted by several private sector players themselves in the last few months. And this happened even as Indian corporate sector profitability hit a 15-year high in March 2024. And some of you may have heard that when in the 1960s, when Henry Ford raised the minimum wages for his car workers, he said, otherwise there will not be enough people to buy the cars the Ford Motors produces. So in some sense, raising wage and salary growth for workers is also a source for aggregate demand for businesses in the medium run as well. So it is both, it is enlightened self-interest rather than being seen only from a moral prism as well.
The government can continue to take policy actions as it has been doing with respect to PLI schemes on labor-intensive sectors, and also in terms of the deregulation action, that is the government's, not just the union government, but the state governments and local governments' contribution to employment generation is by reducing the fixed cost of doing business so that firms can raise the variable cost by hiring more people. Beyond that, I think not everything needs a policy tweak or a policy intervention. Some of it is in the natural self-interest of businesses to be able to find this balance. And that is why I gave the example of Mr. Henry Ford. Recommendation which is made not just to the union government, but to governments around the country is actually a step to boosting employment, income generation, and therefore consumption. This is about deregulation, is exactly towards that. It is not a recommendation only to the union government. So by simplifying regulations and by looking into the nuts and bolts of regulations that affect small businesses, we are lowering the cost of doing business for them, therefore opening up the space for them to hire more, which will lead to income growth and therefore better consumption. That is the very precise recommendation that the economic survey is making to governments all around the country.
Well, that's the message to governments across the country from the Chief Economic Advisor. But let's focus on the growth outlook. The economic survey expects growth for the next fiscal between 6.3 and 6.8%. It mentions elevated geopolitical and trade uncertainties and the possible commodity price shocks as key headwinds. Sapna joins us now. Sapna, the survey projecting growth pangs are likely to continue, and of course, a realistic assumption there on the numbers.
Absolutely. In fact, the survey has borrowed heavily also from the IMF outlook as well as the World Economic Outlook. So keeping that in mind, first in terms of the nominal GDP for the next 5 odd years, the survey says that, as predicted by the other agencies, around 10.2% in USD, in US dollar terms is what India's nominal GDP could be, and 10.7% in INR terms. Also in the US dollar terms, our CAD could be around, it may rise very gently and in a very calibrated manner over the next 5 odd years, around 2.2% of the GDP. But this is actually in dollar terms. In terms of the growth numbers, it says very clearly that the 6.3 to 6.8% assessment for FY26 is also based on the IMF's growth assessment of 6.5%. Starting, FY25 onwards, from the current financial year onwards. So basically, this range of 6.3, 6.8 actually hinges on the IMF's, estimate of around 6.5% growth for India over the next 5 odd years. Now, the CA, the economic survey also mentions very clearly that even if these variables India is able to achieve over the next, 3 to 4 odd years, it's a very good scenario for us because looking at the global context and the global situation at the moment. So, no doomsday indications that, we are down and out. In fact, the commentary, the narrative is extremely positive. And as you have heard, what really is required going forward may not be that much in terms of economic reforms per se. Like somebody asked the CA, what about the employment sector or rather the labor sector, and what further tweaks are required. So he indicated that look, in terms of the employment schemes and skill set skill sets that have been announced in the previous budget. These are policy actions in course, in practice, ongoing at the moment. So I think what the hint over here is that instead of economic reforms, we should be looking actually at business reforms, where the industry, the state governments and academia particularly need to come together and figure out what needs to be done, how those basic bottlenecks need to be removed so that the growth momentum is maintained at the moment, and also whatever we are projecting is achieved and maybe even higher than that. But it's a challenging situation globally. He has also spoken about the China factor very clearly, both in terms of the energy transition, China being the single sole major supplier of critical ingredients for a lot of sectors, also for the technological sectors. The elephant and the dragon in the room is the exact phrase used in the economic survey, and this is something that we'll have to be very, very mindful over the next 1 to 2 odd years. In fact, even 3 to 4 odd.
All right, Sapna, many thanks for joining us. And the survey has also raised the alarm over disproportionate rise in corporate profits, while wage growth has not grown significantly. In fact, it has remained stagnant. Shivani's here with more on what the survey says. Shivani.
India Inc. is witnessing a record surge in corporate profitability. According to the economic survey, corporate profits hit a 15-year high in FY24, with Nifty 500 firms profit to GDP ratio climbing to 4.8%, the highest since FY08. This boom was driven by strong performances in financials, energy and automobiles. Large corporations, particularly non-financial sectors, significantly outperformed smaller firms in profitability. However, despite profits rising by 22%, employment grew only by 1.5%, highlighting a sharp disparity. The survey also highlights an analysis of 4,000 listed firms found that while revenue grew by 6%, companies focused on cost cutting, with employee expenses rising just 13%, down from 17% in FY23. The survey flags wage stagnation, especially at the entry-level IT positions, despite stable EBITDA margins of 22% over the last 4 years. While labor share in gross value added has slightly improved, the disproportionate rise in corporate profits, especially among large firms, raises concerns over income inequality and its impact on consumer demand. The warning is clear: for sustained economic growth, wage growth must align with corporate profitability. Without higher employment incomes, consumer spending could slow, impacting future investments and economic expansion. The survey underscores the need for a fair distribution of corporate earnings between capital and labor to ensure long-term sustainability and stability. Back to you.
All right, Shivani, many thanks for joining us. Deregulation, that's been the central theme of the economic survey. The survey asked governments to get out of the way and allow businesses to focus on their core mission. It says governments must stop micromanaging economic activity. The word regulation and deregulation together has been mentioned close to 350 times. Pariksha joins us now with more. Pariksha, the CA urging the government to pull out all levers of deregulation.
Economic Survey 2025 has given a clarion call for deregulation and getting out of the way. The CA has gone on to say that the future of reforms and economic policy must now be on systematic deregulation. India needs to go all out to reduce compliance costs, administrative costs and minimize controls. We need accelerated deregulation to attract, promote and facilitate domestic and foreign investments. The get out of the way theme also stood out, with the CA saying that the government should not micromanage the private sector and drop the principle of guilty until proven innocent, and rather follow the principle that says one is innocent until proven guilty. The survey says that India is overly dependent on China for critical components, minerals and other electronic equipment, and if the China challenge is big for Europe, then it's equally serious for India as well. The only way for India to reduce overdependence on China is through deregulation. The survey also said that deregulation is more critical for MSME growth than large enterprises. The survey also says that reduction in tariffs and fees, digitization of systems, setting legal safeguards for enforcement and risk-based regulation are all ways through which deregulations can take place in the next few years.
Parikshit, many thanks. The survey has also warned of a churn in the labour market due to the rise of artificial intelligence. Ashmit is here with more on that. Ashmit, what has the survey said on AI and possible job losses and what it prescribes as a possible intervention?
Well, two key themes to what the economic survey is saying. One, that it may be costly if you underestimate the risk coming in from AI replacing jobs. That's one. The second is there's also perhaps a case to be made for taxation of profits made from replacing jobs with technology, with AI. That's the twin theme. The economic survey begins by saying that the impact of AI in terms of job losses will be magnified here in India due to the large scale of the market here. And number two, the low per capita income that we have, or saying that there are already changes, churns being seen as far as the labor market is concerned in anticipation of this technology that is coming. Then going on to say that we need to guard against any form of complacency. There's a low probability, but we still need to guard against it. There needs to be a constant state of vigil. And then finally going on to urge the industry that there needs to be a staggered approach in which this technology is adopted. There needs to be a sensitive approach to adopting this technology. And then going on to say there are already conversations being had in international circles at forums like the IMF that there is perhaps a case to be made for taxation of profits that are made from replacing humans with upcoming, newcoming technologies. And finally going on to say that there is perhaps a three-point agenda that we need to follow. Number one, having institutional readiness, ensuring that our institutions are geared for this change. Number two, ensuring that there is a regulatory framework in place to push the technology in one specific direction. And finally going on to say that there is also a need to structurally change the skilling framework that we have to make sure that children are ready, are geared for the future.
And the survey highlights the progress of the industrial sector and measures taken by the government to boost the sector. Timsy standing by with more on that. Timsy.
Well, that's right. The economic survey has laid out some key challenges and some positives when it comes to the industrial reforms. The survey says that India's industrial sector has seen a growth of 6.2% in FY25, especially when it comes to the strong growth it is seeing from electricity and construction growth. It also lays out that the industrial growth, which had slowed down to 3.6% in the second quarter due to weak exports, monsoon impact and festival timing, seems to be easing in the latter half of the fiscal. It also says that the manufacturing exports are hit by global economic slowdown and rising trade competition. But yes, heavy monsoons, which were slowing sectors like mining, construction and manufacturing, are also to be seen. But yes, also to be noted is that this heavy monsoon is actually giving a boost to agriculture. The festival timing shift led to a second quarter decline in the growth, but consumer demand is slowly picking up since October. The reforms also laid out in the survey say that the state level industrial growth varies, especially there is a scope for further expansion across various regions, and now states need to do some bit of heavy lifting there to boost industrial growth. Also, it says that the government focus on R&D and MSMEs and capital goods to boost long-term industrial growth are yielding some benefits, and that is also going to be the thrust that the government is going to focus on. So let's see what are the policy measures that the government announces, because survey says that many policy measures are under the review to address export challenges and strengthening the domestic manufacturing. And yes, the upcoming budget and the next fiscal is something where government will keep on intervening whenever required to give the industrial reforms a boost, something that we'll have to see.
Timsy, many thanks. The survey also highlights that India's external sector showed resilience amidst global headwinds and uncertainties in economic and trade policies. Abhimanyu is here to detail more. Abhimanyu.
India's current account deficit had moderated to 1.2% of the GDP in the Q2 of FY25 compared to 1.3% in the corresponding period in the previous financial year. Also, the economic survey indicated that India's forex reserves were sufficient to cover 90% of the external debt as on September 2024. Also, uncertainty in the global markets and profit-taking by foreign portfolio investors had led to capital outflows. The survey further observed that the gross FDI inflows had shown signs of revival in the first 8 months of FY25. Also, several non-tariff barriers had been erected by developed countries, including EUDR and CBAM, which may impact India's exports in the years to come.
Abhimanyu, many thanks. Up next, Ola Electric's Bhavish Agarwal dares rivals, saying competitors celebrated too soon and that it is game on. Stay tuned for that and more when we return. Well, let's talk about the market action. The markets going into the budget strong. The Sensex gained over 700 points. The Nifty reclaiming the 25,300 mark. Financials, though, marginally underperformed the blue chips, with the Nifty Bank closing about 0.5% higher. Mid-caps closing almost 2% higher today. It's a 1,000-point rally there as far as the mid-cap index is concerned. But Trump's tariff threats pushing gold prices to a record high today. This after investors flocked to the safe haven metal. The yellow metal is now on track for a 5th consecutive weekly gain. This also marks gold's best monthly performance since 2024. Competitors celebrated too soon. It's game on. That's the word coming in from Ola Electric's Bhavish Agarwal. His comments come months after Bajaj Auto MD Rajiv Bajaj took a jibe at e-scooter maker at CNBC TV 18's India Business Leader Awards. Agarwal was speaking at the launch event of 4 new electric scooters. The Gen 3 models, as Ola calls it, start at an introductory price of 79,999. He added the company had enough headroom for aggressive pricing.
Gen 3 allows us to reduce the cost of manufacturing while improving performance. That's because, again, technology allows us to deliver better in lower cost. So we have that benefit, and Gen 3 gross margin benefit starts now, doesn't end now. Through the year, I had again last quarter said that through the year we'll keep getting benefits from the Gen 3 platform as we add more and more technologies into the Gen 3 platform through this calendar year. So all of that said gives us more headroom in the gross margin. Market pricing will be opportunistic and tactical depending on how competition is evolving, depending on how our market share strategies are evolving. So time by time, period by period, festive season, that will keep evolving the pricing strategies. Sure. But our leadership on cost of manufacturing actually enhances with Gen 3 significantly. So 30-35% is what I'm continuing to guide the street on. And if you see the last 2 weeks in January, we've actually been in that zone on a weekly level. We've been in the 30+ zone on a weekly market share level. And I think with all the new products, with the 12 products that we have now and the pricing, we should get there. And, if competition is aggressive on pricing, we have enough headroom to be aggressive on pricing.
I don't know if you heard Mr. Rajiv Bajaj at the CNBC TV 18 event saying, Ola to Ola hai, but Chetak to Shola hai. But the gap between you and your competitors right now is also very close. So what gives you the confidence you'll be able to, bridge this sort of in the coming months?
See, my response to competitors is I think they celebrated too soon. Yeah. Right? Let them bring their response to our announcements today. And we'll see. Market में मिलेंगे उनसे. Market में मिल ही रहे हैं, and we are back to number 1. Yeah. And we have all these products, the technology. The incumbent ICE companies had a one-time advantage of distribution scale, which we have nullified now. Okay. And the product advantage was always with us. It has enhanced with our Gen 3 portfolio. Sure. And the pricing advantage also with our better cost structure is also with us. So I think game on.
Well, that's Ola Electric's Bhavish Agarwal. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a moment.